General disclaimer. Welcome to this official presentation on Affiliate Marketing Model 3.0. All presenters are providing their services on a volunteer basis and are active participants in all products they are presenting. Their views and opinions do not necessarily reflect those of the organisation. While we aim for accuracy, errors may occur. All content is for informational purposes only. The information provided is general and not personalised advice. We are not liable for any losses. We provide information and systems, but we do not endorse any purchases of memberships. Your decisions are yours alone, so we advise conducting thorough research. If uncertain, seek guidance from a qualified professional. Attendees accept these terms by continuing to view this presentation. Let's explore affiliate marketing cautiously and curiously. Legal disclaimer. You are viewing an Affiliate Marketing 3.0 official presentation. All products and services, their component parts and operating methods and systems, either provided by or created by Affiliate Marketing 3.0, belong solely to Affiliate Marketing 3.0. All IPs are protected. Anyone copying, distributing, or reselling any Affiliate Marketing 3.0 product without express permission risks serious legal consequences. Any unauthorized broadcasting, live streaming, or social media sharing of Affiliate Marketing 3.0 presentations is strictly prohibited. Downloading and re-uploading presentations without permission violates copyright law and may also lead to legal consequences. Good evening, good evening, good evening. Welcome. It is Friday night. It is UK Primetime Live with training and live Q&A. We've got an extra special night for you this evening. So reach out to all of your community, because when Shavez came on Wednesday, he promised us a big reveal today. So we're all sitting on the edge of our seats with our nails dug into our armchairs. Well, at least I am. So reach out to your community, bring your friends, bring your family, bring your teammates, because I'm quite sure that what Shavez is going to reveal tonight is going to be very, very exciting. Make sure you stick around to the end, because we're going to invite you to a special event on Sunday evening. But other than that, I think Shavez is with us.
Joe, please click record. I can't do it.
Okay.
Sorry about that.
Recording in progress.
Okay. Shavez is here, or he was here at least.
Yes, he's unmuted.
I'm here.
Okay, fantastic. Thank you very much, Shavez. I'll hand over to you.
Thank you. Thank you so much. Welcome to UK Prime Time. I believe everybody's doing good. Today we are going to discuss something really, really interesting. And today we are going to begin to learn and understand what is coming next. So yes, with this, you can now understand and guess that something new, something exciting, something that we did not have before is coming. So yes, exciting times ahead. So and today is the first day that we are going to start talking about this new thing that we have built. I would not say building, that we have built. This time it will not be product in the building. This time we will launch it. So, all right. So starting with the infrastructure, today what we are going to cover. Today we are going to cover the basics of the product, why we built it, and what was the whole reason as to this product was required in the industry, and what kind of a crowd that we are going to cater with this product. And also we will cover the reason why we built this product. So today we are going to cover the problem which is there in the industry. So of course we are talking about foundation of next generation trading infrastructure. So we are going to extensively talk about trading, and with trading we are going to cover the problems which are there in the industry when it comes to trading, both retail and professional. We have already explored in our whole journey in the ecosystem. We have explored retail trading with Todo, with concept of LFG. We could not bring it, we could not launch LFG properly. But yes, index trading we have experience in the testing version of LFG. So people who have got their hands on Dodo, they understand what is index trading. People who tested LFG understand the index trading, how it is and how it is executed. Then we have experienced professional trading, or you can say institutional trading with Pi, and you all have used and understood the idea of boomerang previously, which was arbitrage trading over with flash loans. So we have gone through a lot of different flavors of experience in trading, and we have also recently learned and understood a new way of using signals and utilizing signals with Alpha AI, and how signals can help us gain the upside on the upcoming variation in the market, upcoming boom in the market, upcoming pump in the market. So Alpha AI kind of visualized us to build this product, but this is not just the advanced version of Alpha AI. This is a hybrid of Boomerang, Dodo, LFG, Alpha AI with a new, or you can say improved, or you can say dreamy functionality that we always have dreamed about. Every trader which all once dreamt about is something which we have already built. So we are going to talk about the problem in trading, within retail trading industry, within retail users, the solution of the problem, and technology and infrastructure mode of the product we have built. And then we are going to discuss about Hyperliquid, a platform on which, blockchain on which we build this product. Hyperliquid is the layer 1 blockchain on which we built this product. So we are going to extensively discuss about Hyperliquid, what is Hyperliquid, and why we built on Hyperliquid, and the market opportunities that this product is going to attract because we built it on Hyperliquid, and the potential that this product has got because we are tapping the retail traders with this. So let's begin with the problem. And when we discuss, or before even we jump up onto the problem, we let's go back to the trading uh, as an activity. Trading as an activity has existed for centuries, from commodities, stocks to derivatives. Uh, I mean, if you all go back, how many people have started trading back in 90s? Can I see hands up of people who have traded back in 90s with phone brokers? You call people, some people in call centers, data centers, trading centers. You ask them to buy, you ask them to sell. That's how you ask manually trade with the cell phone, with the phone brokers. So how many of you have traded with phone brokers in the past? Oh, we have two ancient people in our room, Chantal and Peter. Then we have Chandraji. Joe, you have traded. Yes, That old? You traded with phone?
It wasn't in the 90s. It was a year or so before the pandemic.
Okay,
But
okay,
I have done it, yes.
okay. How many people have traded with the phones? How many people have called to execute, sell orders and buy orders over the phone? Raise your hands. Let me see. Carl, I'm surprised you have not done that. Carl
I
has
did it
never.
online.
Okay, okay. Carl was never fan of uh, phones, I would say. Mhm. Perfect. So, uh, initially, in the very inception, trading started with commodities, stocks, and then to derivatives. Then market evolved from physical exchanges to electronic exchanges, then mobile exchanges, and now algorithmic exchanges. So, and the evolution began back in 1980s with the phone brokers. In 2000, online trading platforms they evolved. In 2010s, mobile trading apps came. In 2020s, later we experienced algorithmic and automated trading infrastructure. And technology always changes or evolves or inclines towards who wins in the market. So if algos they win, most of the users they go to algos. If you call somebody and ask them to buy or sell and you make money, then everybody is going to call and buy and sell. It's just the behavior of the market, behavior of the user, which inclines towards the strategy whichever works. Trading is has always been an activity in which the win rate, the success rate is the marketing component or the USP of the mode in which the trading is happening. So, when online trading started, the retail traders gained access, but institutions quickly adopted algorithmic trading. So, today, in the next evolution, is automated trading infrastructure that we are going to learn about. Before we understand deeply, let's tap into the problem, the core problem, or you can say the biggest problem in trading, or you can say trading as an activity, that traders lose money. 74 to 89% of the traders, new and old, they lose money. But why do they lose money? Because global trading participation, which of course exploded due to crypto. Um, Back when crypto trading started in 2015, 16, then rapidly number of traders, they grew instantly, but the success rate always remained extremely low because the retail trade failures were there. And what were the core retail trade failures? We will discuss about emotions, we will discuss about lack of risk management, infrastructure, lack of data, poor execution speed, everything today. Today we are going to rip trading as an activity apart and see what is there inside properly. So, retail trader profitability statistics. This is retail. So, let me first establish the difference between retail traders and professional traders or institutional traders. So, to understand my whole explanation today, we must draw a line between retail traders and professional, or you can say institutional traders. Retail traders are common people like us, you and me, who trade, who does not have professional experience in trading, but who also wants to make money and lose money mostly, because retail traders only lose money in trading. We can see the data that 74 to 89% of the retail traders they lose money. And retail traders are common people who enter into trading who do not have professional experience of trading, professional knowledge of trading, but they want to make money and they end up losing money, are retail traders. Professional traders are HFTs or institutional traders which trade with other people's money or which trade with algos with full professional setup. Those are professional traders or institutional traders. So we will be discussing a lot with the term retail traders or retail users in this whole explanation. So make sure that you remember when I say retail traders, you remember that we are retail traders, common people are retail traders who do not possess any professional experience in trading. So trader failure rate, if we see, losing trades are 90% in retail traders, and there are 10% profitable trades. And mostly people lose in forex, then CFDs, and also in crypto derivatives mostly. So when and what are derivatives? In which you trade with perpetual trading, where you trade with short and long with loans. You take some leverage and you trade with derivatives. That's how you lose the most, and your positions they get liquidated on the market fluctuation. And markets are structurally designed where most participants lose. This is the prime, or you can say the most um accurate or appropriate explanation as to how people lose money. People lose money because the markets are structured for the people to lose money. It's not the platform, it's not your skills, it's not uh, just the sentiments, it's not US bombing Iran, Iran bombing US. It's not like that. It is the markets that are designed for most people to lose. And this is the whole reason why retail users they lose money, and professional traders they end up making money, and platforms they always remain rich. And trading, fundamentally trading is a zero sum or negative sum game, because there are fees, there are spreads, there are slippage, there is liquidation mechanics. So in the whole game of fees, spreads, slippage, liquidation mechanics, the retail traders they end up losing more than the institutional traders, because they have no idea what is stop loss, they have no idea what is take profit point, they have no idea how to set slippage, how to look at spreads when it comes to trading. This is the fundamental reason why we it why retail traders they always end up losing money as we compare it to the professional traders or institutional traders, because market reward process and market reward systems are not emotional, and they are designed in such a way that these retail users they end up losing money, and that's how the whole balance of the market is put or structured. So the whole objective of the market falling down, Bitcoin going down, Bitcoin going up, Ethereum going down, is to ensure that retail users they lose money and professional traders they end up making more money, because the moment you trade with emotions, the moment you believe that Bitcoin is going to go up, I have placed a long order, Bitcoin goes down. That's when the professional traders or algos they come into practice and they analyze the market better than you, because you are a retail trader and you trade with emotions. Let's understand the psychology of market cycle chart, how people trade with emotions. There are different emotional trading curves in which retail users they trade. Mostly traders, retail traders, they trade with euphoria, with happiness, and excitement, with thrill, with anxiety, with denial. Once they trade in euphoria and the market goes a little down, there comes a little bit of flavor of anxiety, and then post that anxiety, there is some denial that no, I believe Bitcoin is going to go up, Bitcoin is going to go down, my order is short, this should go on. And with that denial crossing by, panic starts to happen. And with more panic, there is a little bit of depression. And eventually, there is hope that I don't lose the whole money. There is hope that my position will not be liquidated. And there is hope. Uh, and then there is fear that okay, let me close the trade. If I have $10 there, I must not lose all. So that hope, that fear, that depression, that anxiety, that panic selling is part and parcel of life cycle of a retail trader. And that's the retail trading curve on which the whole human emotions, they dominate trading decisions, and which leads to predictable pattern of losses in retail traders. And every human, every retail trader which is not trading with algo is wired for the herd behavior that they lose. When Bitcoin is $60,000, everybody buys. When Bitcoin is $20,000, everybody quits. When you see right now Bitcoin is $71,000, $69,000, you don't buy because you are a retail trader with that herd behavior. Uh, the thing is, this is the real time to buy because Bitcoin is at 69, 70,000. And at this time, retail users, they exit because they bought Bitcoin at $90,000 or $80,000 or $100,000. And so, in conclusion, the emotional trading guarantees loss. And this is how retail users, retail traders, they face loss. This is one of the reasons. After the profitability statistics, there is emotional trading curve in which people lose money. Okay, and then there is huge, this is the most interesting one. I love it. Account blow up statistics. So let's discuss about the trading platforms, how they attract users and how the life cycle of users, they come and go and they abandon the platform, then new users they come and the old ones they go. This is a very interesting subject. This is a representation of trader life cycle. When does a person becomes a trader? Whenever they have some loss in their business. Typically, I'm not saying particularly, some people are professional traders, some people love trading, but typically, if after reading surveys, after understanding the analytics of the market, what I understood is whenever people lose their jobs, whenever they lose hope that they are not going to make money in their business or the business is going a little down, they enter into trading or they try trading. They eventually end up trying trading. And whenever they try trading, they come up with a money, with a sum of money to trade with. And in the first month, that money which is their deposit uh, ends up depreciating up to 85% with aggressive trading by next month. And to overcome, to surpass, to cover the loss of 15%, retail trader, I would say, retail trader trades more aggressively to cover up the losses. And in the third month, typically, this is the survey and data after the survey of sample size of millions of people how they lose money. In the third month, whenever they face a major loss, the capital becomes 30%, and in the month 4, they abandon the account after liquidating the whole position for 30%. So user enters, stays for 3 months, faces a major loss, and goes out. This is the life cycle of a trader. This is the blow up statistics of all trading platforms in the market. And that's how users, old users, they exit, new users, they enter. Thousands and thousands of new users, they enter into trading, they get blown away, they get blown up, and then they exit from the trading. And the new ones, they come in. This is the whole trend of uh, trading statistics, trading life cycle that actually is there in the platform, and this is market data. I have not created this hypothetically. So, and it is very you can say there is huge amount of optimism which is there in the month 1 when they start with the capital, and then comes the aggressive trading stage whenever retail traders, they face a small loss, and then uh, the moment retail traders, they face a small loss, then the same moment they start using leverage trading, leverage amounts or leverage loans in a little more aggressive way. That's where 3x 4x leverage comes in, and even if you get 10x leverage, you put trades with leverage, and bam, you face a major loss by the third month. So that's how the usual average retail trader, they enter into the trading, and they get their accounts blown, and the trader quits. So trading platforms, they rely on new traders replacing failed traders, and most traders never survive long enough to learn. So that's how the whole churning game of these platforms, they are existing, and these platforms are continuing for years and years, and they are making money with the failed and fresh traders that comes and go. And then comes the bigger one of the bigger problems, more than the blow up statistics of usual trader life, that's lack of risk management. Lack of risk management in retail versus professional traders. As I discussed, retail traders are, you can say, novice, or you can say the naive ones, the unprofessional, or you can say unlearned or raw traders. Okay, so if we look at deeply at risk management acumen of retail traders and professional traders, it's very easy to draw a line. The stop loss usage, according to the data which is compiled with hundreds of thousands of retail traders and professional traders, stop loss usage in retail traders is less than or equal to 15%, whereas in professional traders, 95%, almost equivalent to 95% of the traders, they professional traders, they use stop loss in trades, and that's how they do not lose money. That's how retail users, they lose money. Next thing, that is risk per trade that comes into existence. So professional traders, they risk 1 to 2% per trade, and they have strict risk frameworks, and they have portfolio models also. So we will discuss about frameworks and portfolio models in the next uh, module. Uh, so the professional traders, they do not take risk more than 1 to 2% risk per trade, while the Retail users, they take 10 to 50% risk with every trade they operate. And when it comes to strategy discipline of retail traders and professional traders, retail traders in strategy discipline, they lack, they don't have strategy. I would say we don't have strategy, while the professional traders, they have strategy, they have timing, they have set pattern of trading. They know what leverage to uh, take on a particular trade, whether to go long, go short. This kind of acumen in trading or trading with strategy discipline is one of the factors that lacks in retail traders, and that's how retail traders, they lose more, and which is one of the biggest difference between retail and professional traders. Risk management. Then comes the infrastructure gap between retail traders and institutional traders stack. Whatever the tools, whatever the methods, whatever the uh, you can say models stack, I would say, or ideology of retail traders are there or institutional traders is there. That's how money is lost with retail traders. Generally, typically retail traders, they rely on signals. Whenever the information comes from social media, YouTube, they rely upon Twitter influencers, random indicators showing on Instagram, Facebook, Twitter, and biggest of all, retail traders, they engage in manual trading. That means they themselves place orders, and they, without having understanding of where to go, which direction to go, long or short, what leverage to pursue. Retail traders, they do manual trading with absurd signals or absurd information they gather from YouTube, from social media websites, from Twitter, from random indicators that they see in the news, in the uh, you know forums where trading, where the retail traders, they get influence from. While the institutional stack consists of algorithmic models, algorithms through which professional traders, institutional traders, they trade with, and there are risk engines associated. There are risk engines with which institutional traders, they trade with. So overall, if we compare the retail trader stack to institutional trader stack, retail traders, they bring a knife to for a gunfight, I would say. So retail traders, they always lose because they are not armed with correct ammunition, correct arm for the fight. Um so, and then comes the automation of trades. While retail trader is trading manually, institutional trader or HFT is trading with automation. He or she or they do not have to close or open the positions. Their positions are automatically closed or opened with algos, with the patterns that they have set. And then comes the biggest uh, difference between the stacks of retail and institutional traders, that's portfolio models. So each professional trader, they trade with uh, portfolio models in which there is a set pattern, there is a whole um process of modeling in which they trade according to the bear trend of the market, according to the bull trend of the market, season of the market, alt season of the market, Bitcoin season of the market. There's a whole some designed model in which institutional traders, they trade with, which retail trader is totally unaware about. And the infrastructure gap between retail and institutional traders creates a massive disparity in outcomes and success rates, of course. So we all can draw a line and understand if retail users they trade with this stack of, or if anyone trades using YouTube signals, using random indicators, using a method of manual trading, while another trader is using algorithms, risk engines, automation, portfolio models, who is going to fail? Who is going to win? So the success rate entirely depends upon the strategy, the way, the execution method in which the trade is executed. So that's the biggest infrastructure gap between institutional traders and retail traders. Okay, and now after understanding the problems, the issues or the gaps or the problems in the retail problem with the shortcomings with the retail traders, we have come across to the solution. Now we will discuss about the solution and we will start learning and passively start embracing about the product that we have built. And we will also explore the reasons why we built the product. And this is where we will understand the whole ideology of the product and the reason why the product is built. So the solution, what we have brought, but this solution came with the learning, with the experiences. I would say starting from Boomerang, where we understood the scalability challenge, where we understood the mass product uh, challenge, where we understood retail traders require a mass scalable product and require a structured trading system, and where trading should be a process, not an emotion. So what we have built is a trading system, and in this trading system, there is a whole framework which is the key decisive factor in the trading. So there is whole decision framework which we are going to extensively discuss, and how this framework influences and brings precision in the success rate, and how this framework gets retail traders win every time they trade, and what we have brought with our solution. So professional trading process involves market analysis, risk definition, position sizing, execution, and post trade review. So if we understand about trading process, there is a huge, there is a very key aspect of trading process, that is the framework of trading. So initially, starting from market analysis, if there is a little bit of market analysis in which through which the market understanding is when market understanding is there, then only a user should or must get into trading. If there is no market analysis, if there is no understanding of market, then I don't think trading is something which through with which a user or retail trader must engage with. So market analysis is essential, not coming from YouTube, not coming from Twitter, not coming from random indicators, but market analysis, the core market analysis of what is going to happen in the market according to A, B, and C reasons why. Why geopolitics is going to influence, why bear and bull season is going to influence, is it alt season or bitcoin season, and what influence does the bear market uh, have on crypto moving, or what kind of influence uh, is there on the stock market of rainy season, winter season, summer season? Is it time for the uh, is it time to invest in agricultural companies stocks during the harvesting season, during the summer season, or during the peak uh, season in which the crops, the plants are being planted? So this kind of analysis before trading, whether it is crypto, whether it is stock, whether it is forex, whether it is commodity, whenever the silver rate is going up, whenever the gold rate is going down, going up, this kind of analysis, this kind of understanding is basic market analysis, which should be there, which is a must to start trading, or which is a must to enter into a trade. And then comes the risk definition. Risk definition widely means the understanding of risk that is associated with the trade that you are placing, that you are about to execute. And if user does not understand the risk, if user does not is not aware about the associated risk that may come, then I don't think user is ready to place trades or ready to trade. And then position sizing, whatever the position or trade user is going to take, retail trader is going to execute, the amount, the number, the size, number of shares, number of stock, amount of gold, amount of silver, uh, in forex, whatever the unit is, in commodity, whatever the unit is. Position sizing is also important when it comes to decision framework before placing a trade. And then comes the execution of the trade. So user must be aware about the wholesome decision framework before placing a trade. And then comes the most important aspect, that's post trade review. If your trade that you have placed sounds you know uh, kind of okay in the post trade review, if you have seen, if you have randomly placed a trade with just market analysis, without risk definition, without proper analysis, or without proper position sizing, then in the post trade review you will close the trade, and you would rather prefer to go for another one, because you have done your post trade analysis, post trade review, through which you are able to judge whether to continue to hold this position or not. So these are the factors that influence, or that are essential part of decision framework, which professional traders, which institutional traders they use, and which we have kept utmost importance when we were building the product, when we were building the tool which I'm about to give you, which we are about to hand over it to you. So, and this is, like I shared, this is how the algos or professional traders they operate with. Then automation adoption. Let's understand and see the timeline of automation, algorithmic trading share in the market. When was the first time we heard about algos or automated trading, or something in which there is no human intervention or HI, where there is automation in trade? Back in 2005, from the whole trading ecosystem in forex, stocks, commodities, in everything, there was 20% share of algorithmic trading back then. Then after 10 years, in 2015, we saw a major rise up to 60% algo share of the total trading ecosystem. And then in 2024, the number became 80%. So then we understood the automation is dominating the institutional markets, and retail markets are the next frontier in automation. So in automation, we all understand and we have seen pipe, protocol yield, high frequency trading, market making bots, arbitrage engines that are built. So machines are now dominating the market, and retail traders, they still trade manually. So there is huge opportunity for the retail market and retail users, that automation may help, or when automation gets into retail trading industry, retail trading atmosphere, the automation is going to take over the whole retail segment of trading. Whereas we see in professional trading or in institutional trading, algorithms or automation has already taken over more than 80% of the trading share. And if we see current data of 2026, you all can go and see. It will be more than, I believe, 85 to 90% already. So retail markets are the next frontier, and that's our goal. Now, post automation, let's see what we have as a solution on this table. Trading infrastructure evolution. So, infrastructure of trading, how it has evolved and how is it going to evolve, and what new changes, what upcoming um technology implementations or technology um, outcomes that we are going to see. Let's see. So back in 1990s, like we discussed in the beginning, there were phone brokers. In 2000, there were first ever online trading came into existence. In 2010, mobile trading came. In 2020, the concept of social trading began. Like a group of people or institutions, they started trading, and then the rewards, profits were distributed amongst the groups in SoFi, in social finance, in social trading. Then in 2025, and currently we have automated execution infrastructure, through which the bots or the automated algos, they trade and they execute, and they facilitate the profit uh, outcome of the trading. So trading infrastructure has grown consistently, and with year on year growth, technology waves grew, and every phase of this evolution has increased speed and automation in the trading. So what is going to be the next phase, and how next phase focuses on automated execution infrastructure, we will see. So we understand the automation has uh, there is a gap of automation in the retail trading industry or retail trading atmosphere, which we are going to fill with our product. So let's see. Now let's go to the technology, what we have built, and the basics, or you can say overview of the technology we have built, that I'm going to share today, and rest we will cover tomorrow. So there's a big shift that came to the structured system always. So even from online trading to mobile trading and then automated execution, there has always been a shift to structured system, and more structured system tends to replace the previous one because it is more structured, and people went from online trading in computers to mobile trading because it is convenient, more structured, it is more easier, more accessible. Whenever you are, even if you are sitting in the toilet, you are able to access your phone and you are able to close your trades open new ones because of accessibility, and that's how people got inclined towards it, be it retail traders or be it professional traders, both. So whenever there was evolution of technology, structured uh, outcome of technology, the traders, they got inclined towards that. So now let's go on to the technology part and infrastructure mode of the product. What creates our infrastructure or technology mode? The framework. Like we discussed about the framework which involves in professional trading, there is analysis, there is risk definition, there is position sizing, there is execution, and then there is post trade review in the whole process of professional trading framework. So, in the framework, if we understand with technology what should be there, what actually creates the um, what actually hits or creates a structured system that replaces the previous one in the retail trading space is the framework, and that includes the execution speed of the trade. If you go on DeFi platforms for trading, let's say you go on DYDX, you go on Uniswap, and you trade in DeFi, the execution speed sucks. The amount of the fast speed that you get on Binance, you get on Bybit, on centralized exchanges is totally different than on the DeFi platforms, DeFi trading platforms. So execution speed, and this execution speed we are going to discuss later when we will learn and understand the reason why we built our platform on Hyperliquid. And in the meantime, I do that. If you guys want to look at what is Hyperliquid ecosystem, feel free to scroll on your phones. What is Hyperliquid? And I will keep listening to me passively, and I'll go on. Okay. And then the access to liquidity. One of the most important factors, or one of the most significant factors of trading, of tapping into masses of retail traders, the access to liquidity for trades. That means the leverage. Then comes the automation capability of the tool. So we have given utmost importance to the framework while building our product. So automation capability of the product is fully built, fully positioned in such a way that it gives retail traders the safe space where they have uh, seamless execution speed, liquidity access for leverage up to 10 to 50x is provided by Hyperliquid. I will come down to that when we discuss about Hyperliquid. Then comes the automation capability of the product. So we have carefully developed and curated the automation capability of the product that we could not do in Dodo properly, that we could not do in Boomerang properly. So whatever, as this product is the hybrid of all what we could not do, uh, so this product has everything that retail traders they desire of. And this then comes the risk infrastructure of the product, whether the user is going to lose all the money, or what kind of risk infrastructure is built in the product which prevents users not to lose money. The product is built in such a fashion that it must resist users to lose money. It must keep users away from losing money. So, and then the data advantage, the kind of information, the kind of algorithm which fetches the data, the AI module of the product, what kind of advantage it brings, and what kind of edge it puts you as a retail trader on the platform. So, and this is how most platforms fail to build deep technology. These are the framework factors on which most platforms they fail. And even one of them, if one of them are missing, the platform is becomes weak, or platform becomes uh, not so impressively usable. There was just one challenge on Dodo that we faced, that was gas fee in Ethereum, and later we solved the factor of gas fee, and the later when it was on base, the gas fee factor was placated, that was taken off, and then came the liquidity issue in DeFi. So we have seen it all. We have grown with the products, with the inabilities of the DeFi market, of the C5 market. We have understood deeply what it takes for the concept to evolve as product, and what kind of challenges a real product faces whenever it is deployed with the real users, and when users use it, execute it, when users operate the product. So we have built, curated this product according to the learnings, the lessons that we faced, the challenges that we faced in previous products that we built. That's why it is more interesting to me to present it to you. And today I'm just giving you the introduction. Let me bring you the product, then it will bring you different, sizes of smiles on your faces. So, yes, infrastructure layers of the product. And all these layers are very important, and each layer contributes to overall system performance. Weakness of any single layer will become or can become the bottleneck of entire system. And this starts with user interface, how the user is interacting with the trading terminal and dashboard. That is most important aspect of UI. So UI and UX connection with the trading engine is also one of the most important things, important aspects of infrastructure layers that we have built. Then comes the trading engine, order management and execution system. Order management and execution system in seconds. Let me come to Hyperliquid, then you will see what kind of robust infrastructure we are tapping into, and you are all going into to experience, because Hyperliquid is a crazy space for trading. It is built for trading. It evolved because of traders. It grew because of traders, and it became super successful because of traders, for traders, and by traders, by liquidity pool. There are no major VCs in Hyperliquid, and that's just a cult of traders which rose Hyperliquid to this level. Then after post, then comes the risk engine of the platform, where the calculation and the limits are there for the retail users, where there is limited risk appetite and calculation of the threshold to which a retail user can go, or should go, or should not go. That's the most important aspect of a retail product for trading, the risk engine. Without the risk engine, I don't think a product is a complete product, because of the margin calculation and liquidation controls. The product should have our product that possesses the precision of liquidation controls and margin calculations. Whatever happens to the market should not affect us, should not create any kind of hiccup or hindrance in our trading or in our trading journey. Then liquidity routing. Liquidity routing simply means the connection of all different multiple exchanges into one interface. The smart order routing across different exchanges is liquidity routing, and which is very important factor. And this we are very expert in. The way we handled the multi dex arbitrage on boomerang might have showed you the smart contract development capability of our tech team, of how we built the liquidity routing in boomerang. Then comes the blockchain infrastructure, on which there is settlement and verification on chain of assets, and there is a whole verification layer on which the product is validating every single transaction that executes, which is very important for you to uh, get the in-depth understanding and validation that brings you the utmost uh, um confidence in the product. So after understanding the layers on which we have built the product, the infrastructure layer of the product, now let's come to Hyperliquid. What is Hyperliquid? And the overview of Hyperliquid, and then we will discuss why we built on Hyperliquid. Hyperliquid is how many people searched or did a quick, uh, you know, tour or understanding of Hyperliquid. Let me see. Put your hands up. Let me see how many people searched, quickly browsed what is Hyperliquid. Cool. Rest of you are sleeping? Am I too boring today? Or is it after a long time that we are having a training session? Everybody slept? Let me see. Open your cameras. Is everybody sleeping? Let me see. Where are you guys?
There's a risk asking people to open their cameras, Chavez. I've already turned the camera off of somebody that was getting ready for a shower.
Okay, okay, okay. Hello. Hey, Sharif. Okay. Peter. Rajiv ji is up, though it's 3:30 in India. Cool. Then we have Johan, Daryl, Susie. All right, nobody's sleeping, right? Okay, I'll continue.
Chavez, honestly, this is an incredible training. If anybody's asleep, they're missing out.
Uh-huh. Okay, perfect. I
All,
just
all the
wanted to
people that
make sure.
started in the last 10 minutes have missed out on so much as well.
I just hope that nobody's sleeping because I've been talking and there is, when. Okay, perfect. Let's start. Okay, so Hyperliquid coming back. Hyperliquid is high performance on chain trading infrastructure. It's a layer one blockchain which is built for trading. And the architecture of Hyperliquid involves Hyperliquid network, layer 1 blockchain, Hyper BFT consensus, Hyper core engine, Hyper EVM smart contracts, which gives ability to interact Hyperliquid smart contracts with EVM network smart contracts. And each component derives or fuels the trading infrastructure, and this is the reason why traders, they call it Binance of DeFi. Hyperliquid is often called Binance of DeFi. So Hyperliquid is completely self-custodial, non-custodial wallet infrastructure where trading is the only, um, you can say, core fundamental feature. So when we say Hyperliquid, it is termed as, so Bitcoin is store of value, and Hyperliquid, if you will see on coin market cap, I think it is 34th, 35th in ranking. So Ethereum came as a development layer ecosystem in which smart contracts were built, deployed, tools were built, cross-platform engines were built, blockchains were built. But Hyperliquid, on the other hand, came as a financial layer blockchain, only precisely equipped for trading. And that's how we found Hyperliquid the most suitable network to build a robust uh, trading tool for retail traders. Now you all understand this difference between retail traders and professional traders. So we built a product specially for retail traders. We curated it for retail traders. And that's the reason why Hyperliquid, that's the reason why we chose Hyperliquid as a platform to build the product. Now let's look at the performance of Hyperliquid. It is, yes, it is shocking. You will be surprised to know that Ethereum processes around 15 transactions per second, while Solana processes 3000 transactions per second. Hyperliquid executes 200,000 trade orders per second. Every single freaking second, Hyperliquid executes 200,000 trading orders. It is a seamless click, click, click infrastructure which works just like Binance for trading in DeFi. And your crypto, your keys, your crypto concept, where the custody is yours. It is completely DeFi and you operate like it's Binance. How many people have used Hyperliquid before? Let me see. How many people heard about Hyperliquid? Raise your hand. Okay, Eunice has. Cool. How many people heard about Hyperliquid? Mark. Perfect. All right. People who have not, it's your homework tonight. Go back and check what is Hyperliquid and see what it brings. And I'm going to discuss in detail why did we use Hyperliquid. Well, you all know because of this, because of its Herculean speed that it executes the trade orders. It executes trade orders 13,000 times faster than Ethereum, 66 times faster than Solana, enabling real-time trading at institutional scale for retail traders. For retail traders, this is why Hyperliquid. And then there is on-chain order books. So if we compare traditional centralized exchange with Hyperliquid, there is absolutely no transparency on centralized exchanges for order books. There is no custody uh, in centralized exchanges with you. There is no matching. There is internal matching of trades. You don't know who buys, who sells, who fills your orders, and then there is no verification of the trade. When it comes to Hyperliquid, it is super transparent. Order books are on chain, it's public ledger on which the order books are built. Custody is yours, it is self custodial. There is matching of orders on chain, and there is whole verification of orders that is verifiable on chain. Verifiable order books means it's a very uh, big thing that centralized exchanges have been hiding, or you can publicly access with Hyperliquid. So all orders and trades are verifiable on chain. Custody control remains with users, then settlement, execution, and cryptographically provable aspects are there on chain, which is public for everybody. So why we built on Hyperliquid? There were four pillars of advantages that we had with Hyperliquid. First was the high throughput um, of rapid processing, analyzing and testing large volume of samples and large volume of trades on Hyperliquid. We can do billions of dollars of trade. Users, millions of users can come to Hyperliquid and trade. Millions of users can operate. Well, you all can understand with 200,000 orders per second speed capacity what we can do on Hyperliquid. Deep liquid, whatever problems we faced previously in all the tools we built, Hyperliquid solves them all. It is not the first time that we discovered Hyperliquid. We always knew what is Hyperliquid, but uh, when we built Alpha AI, after that we started testing the product. After that we started building the beta models on Hyperliquid, and we were also shocked. It was freaking shocking for us to see the kind of automated transactions we were about to do. We were able to do, we were able to execute, and the trades, the profits that we were able to book, and that was just like eureka moment for us. And we were like, okay, let's build something on Hyperliquid that would, you know, tap huge gap in the retail trading industry. And it is a beautiful product that we have built, and the best thing is product is ready. MVP we are going to launch in couple of days. I think 2 days from now or 3 days from now, before Wednesday, I will whitelist all the users for the demo version. Whosoever is there on call today, if we can get a list of email addresses of these users, 106 people are going to be whitelisted for the demo trading with $10,000 demo accounts. And this demo trading, you can do it with trades, with you can lose this money and reset this also, this demo account that we will give it to traders. And then you can start trading with the MVP we will launch within next 2 weeks. So within 2 weeks, there will be MVP launch of this product, while you will be using the demo version, the beta version with $10,000 demo account that we will give you, that we will offer you for early participation in the trainings. So whitelisting, we will start from Monday onwards. Okay, let's not do it today. Let's do a snapshot of users which will be present on Monday Zoom. So today, then Saturday, then Sunday, 3 sessions we will conduct with everybody. And on Monday, we will do extensive revision of Friday, Saturday, and Sunday, all the three module revision. And on Monday, we will take a snapshot of people present in Zoom and we will whitelist them all. Let me give them more inclusive chance to community to come across. So even we get like 5,000, 10,000 people, not a problem. We will whitelist them all on Monday, on Tuesday, hopefully. And Tuesday we will launch the beta version with test demo trading limits of $10,000 to particular users. So let me go back on why we built on Hyperliquid. High throughput, bigger volume, bigger tendency to process orders, deep liquidity. There is no liquidity scarcity on the assets which are listed on Hyperliquid. Then on-chain transparency of trades, smart contract extensibility on Hyperliquid. And these are the reasons why builders they choose Hyperliquid. Now let's look at the ecosystem growth of Hyperliquid. Total trading volume on Hyperliquid is $100 billion, and there are 500,000 active traders, 500,000 active traders on Hyperliquid, and there is more than 1,000 platforms, DeFi tools that have been built on Hyperliquid. It is a rapid growth trading volume ecosystem where there is user adoption, developer activity that demonstrate the market's platform's product market fit and long-term viability. So this kind of uh, tool, this kind of mobile platform that we chose to build the product on, and you can understand and you can guess the robustness of the product from now after understanding the strength and capacity of Hyperliquid, what we can do with Hyperliquid. I think this is the this is the niche which we were missing out on for long years, for long number of products that we built so far. And so we finally found our home, and we finally found the tool which is going to uh, satisfy, or you can say satiate the community, the amount of volume that we can generate, the amount of uh, scale, or the scale that affiliate marketing can generate with the number of users. And we are finally at the stage where we are confidently in the position to launch this. So let's look at the market opportunity. If we look at the global derivatives market, it's $600 trillion worth of derivatives market, totaling stock, forex, commodities, crypto. While the crypto alone is $3 to $5 trillion monthly derivatives volume. And if we just tap with crypto alone, then we are also sitting on a huge scale of $3 to $5 trillion worth of market share monthly with leverage, with derivatives. And this product is built on Hyperliquid, which offers 50x perpetual margin. So you can understand what we are sitting on, what you are sitting on. This is stronger than anything. Then let's come to the retail crypto growth and retail number of crypto users and retail traders, I would say. So into the back in 2016, if we give a comparative uh, analysis from 16 to 18 to 21 to 24, starting from 5 million users to 35 million in 2018, 300 million 2021, 580 million users in 2024, and this is our market potential. This is our potential market size, what we can tap upon with this product. All the crypto users, all the retail crypto users which have a wallet, which have access to crypto assets are our potential prospects. So what you can tap upon is these many people, 580 million users. Now let's also, okay, you all can guess with the automation opportunity what we are bringing. So, if we look at the automation opportunity and compare it with institutional and retail market, retail traders, institutional side of trading is 80 to 90% automatic with algos, with scripts, with HFTs, with data centers, with high frequency trading engines. While the retail trading atmosphere, retail trading world is automated even less than 10%. So there is a huge opportunity gap between retail trading industry or retail trading atmosphere and institutional trading atmosphere. There is a lack of adoption, automation that we can fill in. So you can guess what we are bringing in the product. You can imagine the essence of futuristic Alpha AI with power of Dodo, with power of LFG, with power of with the scalability aspect that we imagined in Boomerang all together in one place with automation, how big of a market it can tap in terms of uh, being an automated model which can invite the retail traders which tend to always lose money, which tend to come to platforms and lose money and exit every 3 months of a cycle that they grow and then they die and then they come back and die again. So what we have built is truly exceptional and is little, not a little, really, really freaking crazy. Can't wait to show you to you guys. So huge opportunity gap is there. The market size is 580 million crypto users, mostly trading manually, which don't have automated trading opportunity or automated trading tools. Only institutional success uh, proves us that automation works, and institutional success gives us more confidence that automation works, actually works, and automation can actually make increase the success rate in retail traders. So we are this is the infrastructure opportunity that we have in our hand. We can tap upon 580 million crypto users with total monthly volume of 3 to 5 trillion dollars, which are less than 10% automated in terms of trading strategies. What we have in our hand can tap upon this kind of market size. This is our total addressable market that we have. So, and future trading stack. Of course, if we have started building the product, we are also assuming that we will keep building it over and over. The product, the AI analysis, automated execution, on-chain liquidity, global access. Um, so, in the next episode, what we are going to explore tomorrow is the structured execution frameworks on which we have built the product, the automated trading systems on which the product is positioned, behavioral trading design of our product, how next generation trading platforms are being built, and only later in the series we will introduce the product, hopefully by Tuesday. So Monday we will do the head count for whitelisting, the email of users, and Tuesday positively or Wednesday you will get the product, your hands on the product with trading limit of $10,000 to start with, to trade with as a demo account. And when you trade in demo, you will learn how to trade in real. So everything is ready. The whole product is built. We are all set to go live with MVP in a couple of days, and that's why I started the training from today. When we have the product in our hand, when I personally with my tech team have tested the product already, uh, checked the success rate, and is I am confident about the product, I'm confident about the results of the product. That's when I started the trainings and explanations. So yeah, thank you. See you all tomorrow.
Chavez, can you just clarify and reiterate the training schedule, which sessions, and the qualifications so that we get it clear?
Tomorrow we will do another training and we will cover the aspects that I mentioned. Day after tomorrow, again, we will cover more aspects. We will go more deeper in automated trading. And on Monday, we will do head count for whitelisting. And Tuesday, we will whitelist all the users which will be there on Zoom on Monday, and they will start trading. So from Tuesday, there will be demonstration Zooms. And in demonstration Zooms, you will come up with your profits, how much you made, how much I made, what kind of strategy you applied. Did you did rapid trading because it's hyper liquid. It's execution in seconds. It executes more than 100, 200 trades per user within seconds. So you bam, bam, bam trade, rapid fire. It's crazy. We have been
No-
using,
Normally, we don't have a session tomorrow. So you calling a special training session for tomorrow?
yes, I'm calling tomorrow
7
session.
p.m. UK time, yes?
7 p.m. UK time, yes.
Perfect.
So,
Sunday,
or
we
if you
have our
guys,
community call, and we can use that for Sunday, which is at 7 p.m. anyway.
so if you guys are okay, and if US people are okay with 9 p.m. UK, I'm comfortable in both, whatever you guys decide. 7 or 9, both are comfortable for me. Whenever you guys want to come, raise your hands who is up for 7 p.m. Raise your hands uh, then we raise our hands who is up for 9 p.m. Let me see how many people are up for 7 p.m. Who are comfortable for 7 p.m. UK time? Okay, we have most of the people. Perfect. I know today was just introduction. I could not give you guys the X factor of the product, but yes.
I think 9 p.m. might be a better time, Chavez, because we're doing 9 p.m. tonight so that it can accommodate
Both
the
US
US,
and
but
you.
go with the majority.
All right. What do you suggest, Joe?
I suggest 9 p.m. because we are doing tonight at 9 p.m. so that we're doing one session that accommodates the UK and the US.
Okay, perfect. So 9 p.m. it is. 9
Okay.
p.m. tomorrow, 9 p.m. Sunday, then Monday also 9 p.m. and 9 p.m. Monday we do head count of for whitelisting. So inform your teams, inform the groups. Let's go.
Okay, so we'll do, just to clarify then, so 9 p.m. tomorrow night. Should we move Sundays to 9 p.m. as well, or keep that at 7 p.m.? We should probably move that to, mind you, it's a Sunday night. People are going to be at work, are going to work on Monday. So should we do 9 p.m. on Sunday or 7 p.m. on Sunday?
Whatever we
I'll
we
let
can
Carl choose.
okay,
Let's do the community call and then feed into Chavez afterwards at 9
Okay.
p.m.
Fine. So we'll do 9 p.m. for you, Chavez, and we'll do our community call that will just continue. You can come at 9 p.m. on Sunday.
Okay. I'm comfortable at any time, no problem.
Okay. So for you, 9 p.m. For you and everybody else, 9 p.m. tomorrow evening. And for the community call, 7 p.m. on Sunday evening, feeding into this training call for 9 p.m. Directly after the 7 p.m. call.
Okay, perfect.
Oh, hang
See
on.
you.
Carl,
Yeah,
the Brazilian Zoom on Sunday.
we might have to reschedule that.
Okay. Right.
Miguel's in here today, so he's heard all of this.
Perfect. They can bring their people, can't they? Okay. Sorry,
Yeah.
Chavez.
Thank you so much. See you all tomorrow, 9 p.m. Ciao.
Thank you very much, Chavez. What I am tingling. I don't know about everybody else, but I am tingling from tippy toe to the top of my head. I am tingling. What a fantastic session. This kind of training is stuff that people pay hundreds, maybe thousands of dollars for, from people that are giving you online courses. And I think the information that we've just had here is just, for me, certainly has been eye-opening and mind-blowing. And I am tingling. So I can't wait for tomorrow night. All right. We're not going to take any questions because there's more coming tomorrow night. So if you want to hang out till we close, Chavez, no problem. Otherwise, we will see you tomorrow evening.
See you all tomorrow.
Good
Bye-bye.
night, Chavez. Thank you very much.
Bye-bye. Thank you.
Okay, so I don't know, perhaps you'll take a few comments.
Joe, before you do, okay, reminder, everybody, cameras on, but please, be socially aware. You're on a global Zoom. As I said earlier, I spotted somebody getting ready for a shower and quickly turned their camera off. I operate 2 screens, so I got the 1 page of gallery sitting here, and your camera, if your camera's on, you're pushed up to the top of the list. And yeah, so we don't want repeats of the past where people have inadvertently photobombed inappropriately.
Yes. Okay, shall we wrap up, or do anybody in the any of the leaders want to make any closing comments for 5 minutes?
I think we should do a little bit of Q&A, general Q&A, not this topic. So we should reiterate the migration process. There is a video out, or a PDF now published. So reach out to your uplines or in whatever groups and request that, and you can have the PDF. The migration button is on the AFM platform, but it's not installed on the 3FO until Monday. So just get into your AFM accounts, set your email addresses to coincide with the 3FO email addresses, although the PDF doesn't show any mention of that need, but Shavez has said it, so do it anyway. Identify where you've got capital 3 accounts. Lingil, or I can never pronounce it properly, but sent me a message. He's got 5 people that bought financial freedom packs. Don't forget, there is a pack in that product. So make sure you know where all of your capital 3 tokens are and which accounts and what volume. So you're ready on Monday to start implementing this. Remember, you need an active 3FO account. Active means purchase of a product, which Shavez agreed on Wednesday was able to be a $50 miner. With the disablement of deposits, we had a leaders group with Lucky yesterday morning, my time. I'm just whizzing around in my head at the moment. And we've got a strategy. So if you're not able to get money on at the moment, there is a strategy, a protocol. So reach out to any of the ranked leaders in 3FO and we will facilitate you getting started with internal transfers and external transfers as a peer-to-peer. Joe, Chantel, Rajiv, any other, Mikhail, any other bits we need to add about that process?
I'm just doing a video, editing a video tonight that I'll be finishing, maybe not tonight, maybe tomorrow now, I'll see, on how to do an internal transfer on laptop and on mobile. It's not a complicated process, honestly, but you know, we're getting messages about it. So I'm making a quick video, I'm editing it, and I'll release that. You'll be able to find that on my YouTube channel. What I will add regards what we've discussed tonight is, it would seem to me that the new product, whatever the new product is going to be, it will be accessible through 3FO. The people that get a free test account on Monday, consider that the possibility is it will only apply to people with active 3FO accounts. I don't know for sure. Who knows whether it will be, or whether it'll be a generally accessible platform, but I would consider that. It's worth considering if now's the time to jump into 3FO and get yourself at least a $50 miner so that you've got an active account. So that if that is one of the qualifying criteria, then you are ready to accept that gift of a test account with $10,000 on it. But it may not be. It's just something worth considering. Let's go to a couple of the leaders. Rajiv, Chantel, whoever would like to make a comment, away you go.
It's scared.
No, I want to give Rajiv the first chance. Thank you, Shankar.
Hold up your microphone, Rajiv.
Oh,
You haven't got the new one yet.
no, I've not got the new one yet. So, nothing more to say. I did a call yesterday, and like you said, what we said, people, it's a three-phase. First is register, second is activate, third is migrate. So first, we have to do it stepwise. We have to see the teams. We have to build the teams. Let us register. Once we are registered all, then take the entire thing, and then the next step we migrate. We activate. That is, we buy the miners or whatever you want to buy. And how that's going to happen, you have to talk to your uplines, your leaders, because there is internal transfer then going to happen, and that's how we buy. So register, activate, and third is migrate. For that, we can maybe in another couple of days time we'll have another video which Joe will come across, or probably a PDF from the company, where we will see, like, people will see how to migrate, which is very simple actually. But yes, step by step. Let's not make it haphazard. One person's hand and you rush for that. So let us build it step by step. You have 20 people in your team. You have 30 people who had capital who are not there yet in 3FO. Get them all, build the structure back, and then at the one shot, do the purchase, activate it. And like Joe said, a very, very important thing, which I also did not realize. Yeah, probably the free account that for the trading that is Chavez is going to give, probably, probably we need 3FO accounts for that. So yeah, now 3FO accounts are easier. You can have three activated with $50 minus. So it is good for everyone. You get a miner, which will mine also, right? And then you'll get so many more other opportunities to go with that. So yes, thank you.
I can hear the tingling in your voice, Rajiv.
Yeah, it's good. I actually did some thing on this, and I was going through, and I was like really excited, because this is what actually Chavez said earlier, like Dodo, Boomerang, Pi, all
Last week, yeah.
consolidated, and it's exactly talking about all the same things. But yes, we need to learn it first, and then we need to tell people. But yes, there is excitement, a lot of excitement.
I can't say it surprises me, to be honest, because knowing Chavez as we all do, there's not a doubt in my mind that after the loss of Boomerang, it was on his mind constantly, thinking how, when, what to do. So it doesn't surprise me that the work on something similar has never really stopped. Chantel, you were going to comment.
Yeah, well, I really like the summary of Rajiv. Register, activate, and migrate. So my community, same thing. Drill it in. I can't wait for the videos to come and the support. And yeah, I have absolutely the same. With Chavez, we know that we are having a developer person who wants to be on the forefront, who wants to drive a community to make a real change. And if we're able to deliver this, then we are the game changer. And then everything else that ever happened in the past is irrelevant. Because we're on the right track. And if this is just one step in getting on the right track further, then that's also okay. I see it as that we would get a $10,000 trading account, which means it is the volume we are allowed to trade as a license. Let's make sure that we define it properly before everybody thinks there's $10,000 on my trading that I can trade with. It's two different things.
It's probably on a test net anyway, so
exactly.
you won't actually get money out of it.
Well, I don't know. I'm not going into those details, but I'm just making sure that we don't have, people say who bothers about Capital 3.0 tokens that come back. I can just have a trading account here. So, but I think, we're in a very excited time, and thanks guys for, keeping us motivated and guiding us. with your presence, and everybody who's here. Thank you.
Thank you very much, Chantal. Mikhail, did you want to express your tingling sensation?
What what can I say? I mean, you said it all already. So I mean, this is we've been here before, and these coming days will be quite exciting, I think. So just I would just say, just bring your old people back, get them to these calls, and get them on the same journey as we are. I mean, they want to have this test license on Tuesday as well. So bring everyone here. So bring the family back, right?
Absolutely.
Okay,
Perfect.
I'll just put in a tech note, everybody, to Joe. Yes, Joe's correct. It'll probably be accessed through a 3FO account, but the clue is in Shavez is going to collect email addresses. It'll probably be like Pi and anything else. It'll have its own platform, which is registered by email address. So if you come in on the Zoom with just a random account, not a registered in Zoom account, I suspect that's how they're going to collect the email address. So if make yourself a Zoom account, register your email in that, so that when the collection is done, the email address is the one you want to have a test account set up under that email address. Ultimately, it'll be created with a subscription or some sort in 3FO and the same email address, hopefully, and everything will tie together nicely. But
Perfect.
Yeah.
You know, we are entering more exciting times. And do you know why this is exciting? Because you guys are still here. You come every week or every other week or every day or every other day, but you guys have stuck with us, stayed as part of this ecosystem, watching, learning, understanding, hoping, waiting, and you stuck around when the many went off to other projects, got scammed and went to another project and got scammed and went to another project. We all stayed knowing that the path that we are on will lead to many exciting things. So because you guys have turned up, you guys are the leaders. You guys are at the forefront of this circumstance that we are in right now. All of the others that were too disgruntled, that couldn't move on, that stayed sitting on the fence, they are still sitting on the fence. They are still disgruntled. They are still getting themselves left behind. But you guys turned up. You guys are now here getting the information firsthand. Now's the time to consider your business seriously. Now's the time to consider the growth that your business could go through over the next 6 months. Imagine how fast you'll be able to move through the panels. There is not a doubt in my mind that what we have now will be much more powerful than what we had, because of the lessons that have been learned from what we had, which will have undoubtedly led to lots of investigation, lots of research. So I think we are now in an incredible place, and we will do this together as a family. So tomorrow night, 9 p.m. UK time, 5 p.m. EST time. Is that right? Someone correct me or not?
That's correct.
Or is he?
Easy, yep, that's it, perfect. And then Sunday, then that will be 9 p.m. as well for Shavez, the continuation. And then we've got the community call at 7 p.m. Okay, anybody else? Otherwise, I'm going to outro.
Yeah, that free Zoom account that I suggest you register is a free account. Okay, so you don't have to pay for a free account, obviously. But let me just spark a bit of motivation in you. You create this free account with the email address that you're going to do everything in the future. What can the future hold? You people have just been introduced to what could be a market leading product, which means you're going to have people come to you for advice, registration, team growth, and you might convert that account into a funded account down the track, 6 months, a year, and suddenly you are a leader. You're joining us in the leadership group. So think of your future as well. Prepare for it. That's all, Joe.
Perfect. Okay. So let's take us out. Now, you are all familiar with this, so I'm only going to reiterate what we have just discussed. It's Friday, so it was the community support and training day, which means it's the weekend. So normally this is a personal business day, and I suppose we could still categorize it as that. So make sure you are with us tomorrow evening at 9 p.m. UK time. And Sunday evening, we've got our global community call, which is at 7 p.m. 7 p.m. UK time, 12:30 a.m. India time, 11 p.m. Dubai time, 3 p.m. EST time, and 12 p.m. PST time. So this is the place where you can come and have open conversation. This will start at 7 p.m. UK time and all of those other times, and it will flow through into the community call with Shavez at 9 p.m. So I highly recommend that you come and join us on the panel and come and have your say, come and have and come and be part of the conversation. And of course, me and Carl are always there on US prime time. So come and join us on any US prime time if you're brand new, especially if you're brand new and invested in an ignition pack, because you could qualify for a free $50 miner. Okay, that is it. So all that's remaining is to thank all of the people that have joined us on the panel and have contributed this evening. And of course to Shavez, I know he's not here, but you know, a big thank you to Shavez for never giving up, for never letting us down, and for always keeping in mind this community, making sure that the mantra that no one gets left behind is carried around on his shoulders. And of course, again, thank you to all of you that have turned up and been part of this journey and stayed part of this journey. And we will see you all tomorrow evening at 9 p.m. UK time for the continuation. Good night all. Have a great evening.